Welcome back to another video, guys. This is my second video back. This is going to be a week 2 of 2023 trading recap. So in this video, I'm going to go over the 4 trades that I took. I'm going to give you guys a little bit of insights into what I was seeing on the week, how I was feeling, what my mindset was, the playbook trades that I saw. Alright, so first I want to go over the trade that I took on Monday. So I took one trade Monday. I didn't take any trades Tuesday or Wednesday. I took one ES or MES futures trade during pre-market on Thursday, and then I took 2 small Tesla trades on Friday. I had a lot of good playbook trades that I saw, especially Friday. I'm going to go over the playbook trade that I really should have taken, that I was ready to take, that I just didn't take. And then Wednesday we saw 2 continuation moves on Tesla and Amazon. And Monday we saw a really good ES trade. So I'm going to go over those trades, but first let me go over this trade that I took on Monday on Tesla. I lost about $100. I was looking for the hold of 118.8, which was last week's high. So if you look at Tesla in pre-market on Monday, we were in a clear uptrend, and we were pushing all of pre-market. And then towards open, maybe 15 minutes before open, we got over last week's high, which means that we were gapping over last week's high. So off open, I was looking for a retest of last week's high to show strength and then push to the upside. So when we opened right around 119 and we pushed down, I had an entry on 4 contracts at about fill price at $4.30. I think the bids were at maybe 118.6. And my stop loss was below the low of the 930 candle. And I got stopped out when we wicked below really quick at about like 118.2, and then we ended up pushing up to the 120 level and found some resistance there before selling off. I would have taken some profits at 120 and then looked for a move up. Probably would have taken 2 contracts off, and these contracts got up to about I think $5 and maybe 20 cents. Yeah, about $5.20. So I would have caught in on 2 contracts, maybe 75 cents, and then probably got stopped out at about break even on the other 2 contracts. So Thursday was the day that we had the CPI report came out, and to give a little bit of perspective, Tuesday we had about a 35-point range on ES for the entirety of the day, and I didn't see any trades in the first 30 minutes or hour of open. So I was very hesitant on Wednesday to take any trades. I thought that we might see a pretty choppy market in anticipation of whatever the CPI report was. So Thursday, what I saw on the day was, in the pre-market before the CPI report came out, was that the 39.85 level was acting as major support. So I knew that that was an inflection point that I wanted to trade around. Knowing that also 39.60 was a level, that 4,000 level is definitely a major level. And then if we broke over 40.20 on ES, I was going to look for continuation to the upside. And the CPI report, the estimate was 6.5%, and we came in right at estimates. And this wasn't really great because there was no indication as to, oh, the market should rip off this, the market should tank off this. So I was just going in with a completely open mindset, seeing what the price action gave me, and then I was going to trade off that. So we initially sold off of open, or off the CPI report, all the way down to this 39.60 spot, and then pushed right on up, right about to this 4,000 level, and the 935 candle closed over 4,000. And then I was going to look for us to hold 4,000 for a continuation up to 40.20, and then if we got over 40.20, look for a move through that. So I got in 2 MES contracts at 39.98.75, knowing that I was going to risk right down to this 39.95 spot, which is about, if you're risking 3 or 4 ticks, that's about $15-$20 per MES contract, looking for about 20 points, 20 ticks to the upside. So it's $100 per contract, so it would have been a $200 trade if it had worked out and we pushed up to 40.20. But I lost about $30 on this trade. Really small loser. The last two trades that I took on the week were both on Friday, and they were both Tesla trades to the downside. And the reason I was looking at Tesla for more downside was because we had 3 downgrades in pre-market, and we also had news that US and Europe Model 3, Tesla Model 3s were getting price cuts. So obviously off this bad news and the fact that Tesla was gapping down about 7 points, I was looking for some trades to the downside. I was definitely too antsy to trade Tesla to the downside Friday, which means that I was almost forcing trades when the price action didn't confirm that we were weak. Even though we were gapping down, that move had basically been factored in. And then off open, we had actually really no weakness on the day, so I shouldn't have taken any of these trades. But first off, at 9:30, since we had gap below the prior day's low, which was 117, I was looking for us to push up to 117 and then reject off 117 to see a continuation down to 115 and then hopefully a move below 115. And the tape really didn't seem weak at all, but I did force this trade. I took it right at open on 5 contracts, and then I ended up getting stopped out. This was about a $60, $70 loss. So I only lost like 10 cents per contract, which is really good risk management. And had this play worked out, I would have probably saw at least $1 per contract. So I'm happy with the R to R that I saw on this trade, or that I had on this trade. But I probably shouldn't have taken this trade because it wasn't a great setup. And the chart and the actual intraday price action was showing that weakness wasn't there. The other trade that I took on Friday was a continuation sell-off when off open we had pushed up, sold off, got below low of day, and then I was going to look for a little pullback for a continuation for more downside since we had seen these 3 big red selling candles that broke below low of day. But I got in here and then stopped out, and we kind of chopped around before slowly continuing back to the upside. And after this trade, I said I wasn't going to take any more trades on Tesla. I was done for the day. But those were my 4 trades from the week, so nothing really of note, nothing of real substance. Didn't take any good trades, didn't catch anything good. But I felt like my mind was in the right spot, and I was consistent with showing up every day, and I saw the market well. So now let me get into the Playbook trades that I saw in the week. So for me, the 3 best Playbook trades from the week were on Monday, Wednesday, and Friday. So Monday, if you want to go back and look at it, we had gapped over the prior week's high on ES, which was 3928.75, I think. And we had came down and bounced off that 3930 zone, which was right at last week's high, bounced off that, and then ran up over 30 points. So that was a really good trade. I had missed that trade even though I was ready on it. I was ready to take it. It was in my game plan. It was a spot that I was looking for, but I had taken that Tesla trade, and that kind of threw me off. So I didn't take this ES trade, even though I definitely should have. On Wednesday, if you want to go back and look, the market was extremely choppy and a very tight range, but Amazon was moving off open, and we had pushed over. After getting over the 90 level, we had pushed over the 92 level, which was the key level, and then we were forming a 5-minute bull flag with support at 92.4, and that was a really good setup for a continuation to high of day and then over high of day. You could get about 60 points on those pretty cheap Amazon contracts, so that was a really good setup if you want to go back on the charts and look at that. And the last trade that I want to go over on Thinkorswim was Friday, this Netflix trade. So to zoom out a little bit, from May of 2022, Netflix had gapped down significantly, which was, I think it was like a 35% move down in one day on something like Netflix had lost 200,000 subscribers. It was a very minuscule amount of total revenue, but the market reacted really adversely to this news. We had gapped down significantly, and ever since we bottomed at this 170 level and had tested as support multiple times between July, and May, we had pushed to the upside pretty slowly. And then in December, we had rejected off of this 330 level, which was where the gap fill was and was a major level. So December, we had rejected off of it. And then this week on Tuesday and Wednesday, 329 or around 329 was the high of day. And then on Thursday, we had a high at 332.95. And the market was gapping down. I think SPY was gapping down about 3 or 4 points from Thursday night into Friday morning. And Netflix was gapping down as well. But if you see pre-market here, and I was watching Netflix, and in my game plan I said I wanted to see a break over 330 and then for us to hold 330. Right before open, we had gotten a surge of some green volume to bring us up to this 330 spot. And then off open, we held 330, pushed to the upside. This 332.94. This was the prior day's high. We had rejected right below that prior day's high and then had came down to this really significant 330 level, and we're holding it on low volume. So let me zoom in a little bit. On low volume right here, you can see that we were holding 330. The market was pretty choppy at this point, but this is where you can get a really good entry. The 335 calls were 70 to 80 cents in this spot, okay? And this 335 level right here, and this was the prior day's high. Once that we pushed through prior day's high, these contracts got all the way up to $2. And then when we got to 335, they were like $2.50. I'm going to provide a screenshot of what the option contracts chart was. But from 70 cents all the way up to $2.50, that's 300, almost 400% in maybe 10 minutes on a very small move. But because of the power of 0 days till expiration option contracts, if you get in on this hold of 330 with a pretty tight stop loss, maybe 329.5, maybe even low of day 329, then you're maybe risking 30-40 cents on those 80-cent contracts. You can get a really nice push to the upside. And this was my game plan because I was watching Tesla to the downside because it had negative sentiment. I was way too focused on Tesla. Even though Netflix had gotten an upgrade on Thursday, got another upgrade on Friday, I wasn't ready to take this trade, even though I really should have been because I was more focused on downside. So had I gotten into this trade on 5 contracts, you know, I could have seen a $400, $500, maybe $750 trade on this, which would have made my week. And just to show for comparison, I had taken 4 trades. They were all losers, but I lost about $250. So on one trade, even on a $400 position size of 5 contracts at 80 cents, I can make back more than double of what I lost in the entire week on 4 losing trades. So it just goes to show the power and what I'm trying to focus on from a risk to reward perspective. But this was the best trade that I saw on the week, and I wasn't able to capitalize on it because I was too focused on Tesla. So with that being said, I hope that you guys enjoyed this video. I know that it might have been a little bit all over the place, but these videos will progressively get better. Let me know if you have any questions, any comments down below. I hope you guys enjoyed, and I'll see you next week.